Ajith Kumar Rai, founder and chairman at Suprajit Group of Companies. Firstly, good morning and welcome to the show, Mr. Rai. My first question coming to you is, clearly from a quarter perspective, there has been pressure with regards to margins. There has been pressure with regards to profitability as well, down to the tune of almost around 16 to 17%, and a slight miss with regards to what the street was estimating. From here on, though the quarter has been better than the previous quarter as well, so multiple factors that we're looking at. So how would you rate this quarter? Would you call it a turnaround quarter for the company, or do you think some more improvement is still needed?
Good morning, and thank you for having me on your channel. We believe that we had a very good quarter, actually. Our challenge has been our international business, that is Suprajit Controls division. I've been saying that the international business, if you are in the 6 to 10% EBITDA margin, I think that is good. But 10 is a very good. In fact, in the last quarter, for the first time, we did the double-digit EBITDA in the Controls division, giving a EBITDA margin of nearly 12%, which I think is exceptionally good. So I think the worst is behind us. I think what the number that you mentioned is largely because of our recent acquisition, and the costs of running it is involved. It has got nothing to do with our core business. This quarter has been a strong quarter for all our core businesses. What you have said as a slightly negative is because of when you are doing a consolidated number, you're adding on the recently acquired SCS, which was taken from an insolvency case. And because of that, there has been certain losses. That would be overcome in the next couple of quarters. So we feel that the quarter that is just ended, Q3, was one of our best quarters.
And it's been qualified by our analysts who also suggest that it is, in fact, a very strong quarter for you. Of course, notwithstanding the recent acquisitions that you made. So, but am I correct in understanding that, that acquisition will normalize into your statement in a couple of quarters? Can you give us some more, outlines on this one?
Yeah, the SCS transaction has got two tranches. The first tranche was the European side of it, and second tranche is Canada and China part of it. The first part is it been done, which has got the plant now in Morocco, and of course they had earlier plants in Poland. That has been a completely loss-making side of that business, whereas the China and Canada part of it, which will be concluded by March, as we have disclosed, is the more profit-making one. When you look at together in the next 2-3 quarters, we expect the numbers to be a lot better than what you're seeing today at the SCS number. It's an insolvency case, so obviously they have been bleeding, and that has been now slowly and steadily getting cut down. And all the costs will be absorbed this quarter or so. Once all that has been done, I think we should be having a much better operational results going forward from the next couple of quarters. So overall, I think SCS transaction brings us significant value in terms of being present in Europe, very close to Europe, in Morocco, and also getting a plant in China, which will supply to globally.
So my colleague was also mentioning certain other restructuring that would perhaps include, maybe winding up or reducing some of your operations in nations abroad. Can you tell us a little bit more about that as well and potential timelines?
Yes, on the SCS side of it, I think the original production was happening in Poland. All of that is now being moved to Morocco, and the Poland plant will be completely shut down. The German was also originally a plant. Now it is more a warehouse and an engineering center. The warehouse part of it will also be moved out of Germany to Hungary to bring the costs down. So this is the two major things that we are doing. All the production getting shifted to Morocco, which is a low cost. The warehouse getting shifted to Hungary again, which is low cost. And Poland is being shut down. I think that is the third part. And of course, in the process, the German team, the total numbers will also come down, which will also add to the improvement of costs. So this is some part of the restructuring that is happening within SCS.
So Mr. Rai, would it be right to say that the worst is now behind, number one, and two, with all the restructuring initiatives that are underway for the company so far, there could be some bit of margin pressure in the near term, but albeit a major improvement and operational efficiency that would kick in. And secondly, the second tranche of the SCS acquisition, which is already a profitable business, by when would that be completed?
I'll answer the second question first. I think the SCS transaction will be completed by end of March, give and take couple of weeks here and there, but it's in that final stage, so it will be done by that time. In terms of the margins, I think our stated the margin range has been 13 to 15% EBITDA margin and a double-digit growth. We have been doing a double-digit growth consistently now, and the EBITDA margins, because of the SCS, it has dropped below that 12 to 15% till the last quarter. But in this quarter, as you have seen, the numbers have gone back within that 13 to 15% margin. So we are back into what we have committed to our investment community. So in terms of quarter to quarter, there is always some fluctuation due to certain expenses and one-offs that happen in an organization that has got something like 25 plants all over the world. So that apart. If you look at operationally, I think the worst is behind us. I think Q3 was a turnaround quarter for us. And going forward, I think the margin guidance that we have given will be met, and the top line growth also will be met.
Right. Now, Mr. Rai, a final question then. Your exposure to the US, as well as several rhetorics coming from the president, the implications of any tariffs, if it may impact your company in any way?
Yes, I think if the tariff is really implemented, I think at this moment he has put it on hold for both Canada and Mexico for the time being. These are all negotiating tools. I understand from where the US government is coming from. As far as we are concerned, if there is a tariff to these countries, there would be some impact. There is no doubt about it. But please understand, we are not the only company who will be affected globally. Today, automotive supply chain is so complicated and so complex and so interlinked. There will be always a connection to China or Mexico or Europe or India. So it's very difficult to de-link. Whenever these disruptions happen, we'll end up going to the customers and telling us this is what it is and trying to convince them this is an issue that is beyond our control. So we hope it doesn't happen, but if it happens, ultimately we'll have to go to the customers. Will it have an effect? Yes, but eventually we are hoping that this will all be passed on, which will eventually increase the price of the product, which is a different story altogether.
Right, that's going to be an interesting take. I think we will have to wait out for April for all of this to take effect as well, and what the final conclusion is. But thank you, Mr. Rai, so much.